Hello, I'm John Sanders. I am Director of the Benefit Coordinators. We serve you, employees of the federal government. TBC is an educator to your benefits and a tool actually for your financial goals. Today we're going to have an in-depth look at the topic on our plate, and it concerns many employees, almost all of them as a matter of fact. It's the Thrift Savings Plan G Fund and its performance against inflation. So let's get straight to the point. The G Fund in the TSP is an exclusive investment option known for its assurance that it will never yield a return less than zero. It's a safety net for federal employees aiming to preserve their savings. But here's the question we need to address. Can this safety net safeguard your purchasing power in the face of inflation? Much the same as what's going on right now. Now let's talk about the G Fund's unique qualities. It's exclusively available to federal employees with TSP accounts, and it comes with a government guarantee against negative returns. This feature makes it an attractive option for those who prioritize safety in their investments. The G Fund's value is tied to the average yield of government treasuries, which sets it apart from similar government securities like treasury bills. Okay? The strategy behind the G Fund's returns is based on the expectation that long-term rates of 10 and 30-year treasuries will outperform short-term government paper. In essence, it aims to benefit from higher yields on long-term investments. However, as time has passed, the gap between the yields of short-term and long-term investments of this nature have been narrowing. Okay, folks, narrowing. This presents a challenge to the G Fund's ability to outpace inflation and protect your purchasing power. So let's examine the historical performance of the G Fund to understand its track record against inflation. In the early years after its inception in 1989, the G Fund provided annual returns that substantially exceeded the country's economic inflation rate. For instance, in the first year, it delivered an impressive return of 8.81%, while inflation, as measured by the Consumer Price Index, stood at 4.41%. It was a strong start. Now, the trend continued positively through the 90s, with the average difference between the G Fund's growth and inflation decreasing slightly to just a little bit over 2% from 2000 to 2010. Despite this narrowing gap, the G Fund continued to deliver solid performance and consistently beat inflation. But, there you go, but then a turning point arrived in 2011. And for the first time since the TSP's inception in 1988, the G Fund's annual return of 2.45% was less than the inflationary growth of that year, 3%. This trend turned into 2012 when the G Fund's 1.47 return fell short of the 1.7 for the Consumer Price Index. Inflation was slowly gaining the upper hand. Inflation continued to outpace the G Fund's rate of return in subsequent years, the 2019, 2021, and 22, showing significant disparities between the two. Notably, in 2021, the U.S. inflation surged to a substantial 7%, while the G Fund returned just 1.38%. The gap had become quite pronounced. That means you're losing money. So, what are the implications of this? Well, the G Fund is often touted as a safe investment due to its non-negative return guarantee and exclusivity. However, its ability to keep pace with inflation raises legitimate concerns. You see, over time, this mismatch between the returns and inflation erodes the purchasing power of a federal employee's retirement savings, potentially leading to financial insecurity during retirement. To address this challenge and ensure a secure retirement, federal employees need to carefully consider their TSP investment strategy. And here are some of the strategies to help you build a robust TSP retirement plan that can actually withstand the effects of inflation. You can diversify your portfolio. Consider allocating your funds to other TSP options like the C Fund or S Fund to potentially achieve higher rates while managing risk. Also, regular portfolio review. Continuously monitor your TSP portfolio to assure it aligns with your retirement goals. You can make adjustments as needed to adapt to changing economic conditions. Number 3, you can consider inflation-protected securities. Now, these securities are specifically designed to safeguard against inflation. Including them in your portfolio can provide a reliable source of income that adjusts with changes to the CPI. Also, you can consult with the benefit coordinators seeking our guidance. We can help you create a customized strategy tailored to your unique circumstances and goals. Also, building an emergency fund. Maintain an emergency fund outside of your TSP to cover the unforeseen expenses and prevent early withdrawals from your retirement savings. Folks, in conclusion, the G Fund in the Thrift Savings Plan offers safety and exclusivity. However, its ability to combat inflation is a real big concern. It's crucial to strike the balance between safety and growth to achieve financial security in retirement. Well, we do hope that you found this information valuable. If you have any questions or insights to share, please leave them with us. Also, until next time, stay informed, stay prepared, and stay financially secure. Folks, take care. I thank you all for watching. TBC has created a handbook. It is available to help you understand the complexities of your benefits, and there are many. It is available on Amazon or by contacting us. If this video has helped you, press the like button. Subscribing will help us, and pressing the chime will notify you of our new posts. I thank you for your service.